But let's talk about a company that's already reported its numbers. The stock is down about 1% or so. We have the management of Astral joining us right now. Mr. Hiranand Savlani, who is the ED and CFO of the company, is joining us on the show. Very good afternoon to you, sir. Thank you so much for joining us in ET now. And let's talk about your numbers. You know, while your recent cost-saving measures have shown short-term benefits, if you could help us understand what are the steps that you're taking to ensure that these gains are actually sustainable over the longer term. Are there any structural changes or innovations that you've planned to drive cost efficiency even in these high growth phases?
So yes, we have maintained this margin not today, but if you see last 3-4 years history of Astral, we are consistently maintaining this margin. The biggest reason is that it's the decentralization of plants, so that is helping us to save a lot cost into the logistics side. Our now new plant of Hyderabad is coming production, so that is one of the reason. Secondly, if you see continuously, we are adding the value-added products. So value-added contribution is increasing in the total sales pie, so that is also contributing to the higher margin. So these are the main two reasons that we are continuously able to maintain the margin in a difficult times also. In this particular quarter, we have the other cost also, so that has also helped to maintain our margin.
Okay, looking at maintaining margins there, but for the adhesives as well as the paint segment, what's the outlook for margins and revenue in the coming year, and a word on the competition intensity there?
So like our margin in adhesive, we are constantly maintained last 3 years. If you see, we are in the range of 14 to 16%. So we are of the view that we will be able to maintain this margin of 14 to 16% for the current year, full year also. First half also, if you see, our margins are 15.5% of India operation. So we will be able to maintain that thing. The only little challenge of adhesive margin is from the overseas operation. There also we have taken a lot of steps, like we have developed a few R&D products which we are going to commercialize maybe in Q4 end. When that will be commercialized, there are going to be a big advantage out of this new product in terms of margin and as well as top line. That's why we have given the guidance of double-digit growth next year for our overseas operations also. Secondly, in our US subsidiary also, we have developed 12 different categories of product which consist of construction chemical, adhesive, sealant that are also going already slowly and gradually we are launching into the market. So the number will come into the Q4.
Right. The DGTR has actually issued the preliminary findings with provisional anti-dumping duties on PVC suspension resins. How do you see this actually impacting the industry and your company?
So see, if last 2 year industry is struggling for the value growth, everyone in the industry is able to deliver the volume growth last year very heavily. But if you see the top line in value terms was eroded completely. Because the reason is that the polymer price have crashed because of heavy import from China because China is dumping sizably into the Indian market. So because of that, entire industry lost the top line. So now with this initiative, we are of the view that now the polymer price start going up. In just 1 week after the announcement, you can see that already 4% increase is there. So we are expecting at least 8 to 10% kind of minimum rise into the polymer price. And that is going to help big way to the industry in growing the top line because your costs are fixed. But if your top line is not going to grow, then you are under the pressure of EBITDA margin. But now with this initiative, the top line growth will come back for the entire industry. And we are considering this as a very, very positive step for the industry. Secondly, because last 1 quarter, almost polymer price was constantly going down. Almost 13.5% drop was there in the last quarter alone. So because of that, a lot of inventory losses are there in the system. And because of that, no one is able to grow the top line. And the dealer and distributors were not ready to stock because continuously it was falling. Now with this step, I think dealer and distributor community will also restock that inventory. So that is also going to give us the one kind of pent-up demand in this quarter. And that is going to help the industry in a big way.
Okay, and what about the destocking and raw material pressures in the PVC pipes and plumbing business? Is that expected to continue in second half?
So H2 is we are considering in a different way. H1 industry was in a pressure of downward trend. while H2 will be on an upward trend. Whenever there is an upward trend, two benefits is there. One on the inventory gain side, and secondly on the demand side, because dealer and distributor will rush to stock. Rather than normal stock, they are buying even extra quantity also to take the advantage of the price. So this is going to be helpful to the industry in the H2.
Right. Lastly, sir, what's the growth outlook that you have for the bathware segment? Is there potential for margin expansion or further margin expansion going ahead?
I think bathware, we are at a very initial stage. If you see this first half, company has grown 75% top line. And we are almost close to the break-even kind of level. Very negligible loss is there. So we are expecting that by year end, we will be converting our company into the profitable company. The real growth will come from the next year, because this year we are expecting 100 to 125 crore kind of guidance we have given. We have already completed 55 crore rupees in the first half. So we are confident that it is going to help us to improve our margins also, because initially, setup costs will always be high, employee costs, branding costs, and other costs. So once the volume will start picking up, it will convert into the positive EBITDA margin.
Okay, waiting for that volume and price uptick. Thanks, Mrs. Savlani, for making time and speaking with us. With that, we're completely out of time on this edition of Markets at Noon. From the entire team, thanks so much for tuning in. Stay